Hey everyone, and welcome back to Everything About Accounting. We've covered revenue, the top line. Now, let's look at what gets subtracted from it, expenses. In accounting, expenses are the costs a company incurs to generate revenue. Simply put, it's the cost of doing business. This includes anything from employee wages and rent to the cost of goods sold and even depreciation. Think back to our lemonade stand. The cost of the lemons, sugar, cups, and even the table you used are all examples of expenses. Expenses are deducted from revenue on the income statement to calculate a company's profit. The goal is to keep expenses under control to maximize profits. There are different ways to categorize expenses. One common way is to divide them into operating expenses, like rent, salaries, and marketing, and non-operating expenses, like interest on loans. Another way to categorize them is as fixed expenses, like rent, which stays the same, and variable expenses, like the cost of goods sold, which changes with production. Understanding and managing expenses is crucial for a company's financial health. It helps to see where money is going and make informed decisions. So, to summarize, expenses are the costs a company incurs to generate revenue. They are deducted from revenue to calculate profit, and they can be categorized in several ways. There you have it, expenses explained in under 90 seconds. Are you finding these term explanations helpful? Let me know in the comments. And don't forget to subscribe for more quick and easy accounting lessons. What should we explore next? Thanks for watching, and I'll see you in the next video.